Hi, this is the first in the series of videos for complete comprehensive example. In this example, we will deal with the situation where goodwill is brought in by the incoming partner and is retained in the business. Let's go to the example sum. Example sum. Following is the balance sheet of Subhash and Asha as at 31st March 2019, sharing profits in the ratio of 3:2. We have the balance sheet given to us. On the right side, additional information. They admit Tanya as a partner on 1st April 2019 for 1/6 share in the profits. It was decided that first point, value of land and building be increased by rupees 3,000. Point 2, value of stock be increased by rupees 2,500. Point 3, provision for doubtful debts to be increased by rupees 1,500. Point 4, a bill of exchange of rupees 10,000, which was previously discounted with the banker, was dishonored on 31st March 2019, but no entry has been passed for the dishonor. Fifth point, the liability against workmen compensation reserve was determined at rupees 20,000. Sixth point, Tanya bought rupees 10,000 by check as her share of goodwill. Seventh point, Tanya was to bring further check of rupees 15,000 as her capital. We are asked to prepare the revaluation account, partner's capital account, and the balance sheet of the new firm. So we see here about the goodwill treatment in point 6. Tanya is bringing in her share of premium for goodwill rupees 10,000 by check, and this amount has been retained in the business. So let's go ahead with the solution. We will first prepare the revaluation account, the partner's capital accounts, and then we'll follow it with the balance sheet. Solution. Revaluation account. Left side debit side, right side credit side. We have particulars, rupees, particulars, rupees. The first point says value of land and building be increased by rupees 3,000. So buy land and building, account 3,000 rupees. Second point, value of stock be increased by rupees 2,500. Buy stock, account 2,500 rupees. Third point, provision for doubtful debts to be increased by 1,500 to provision for doubtful debts, account 1,500. The fourth point says a bill of exchange of rupees 10,000, which was previously discounted with the banker, was dishonored on 31st March 2019, but no entry has been passed for the dishonor. So now the treatment for the fourth point is to debit the debtors account and credit the bank account, which means we'll have to add the amount to the debtors figure and deduct the amount from the bank balance. This will not affect our revaluation account, so we'll go on to the next point. it says that the liability against workmen compensation reserve was determined at rupees 20,000. Now, as per the balance sheet, we have a workmen compensation reserve of rupees 15,000. The liability is more than that of the reserve, so the difference of 5,000 we need to create by debiting the revaluation account. So, to workmen compensation claim account, 5,000 rupees. The sixth point and the seventh point will not affect the revaluation account. So let's see whether it's a gain or a loss. The debit side totals to 6,500 rupees, whereas the credit side totals to only 5,500. The debit side is greater than the credit side, so we have a loss on revaluation by loss on revaluation transferred to partners' capital accounts. We need to distribute the loss among the old partners in OPSR. Old partners Subhash, Asha. Total loss 1,000 rupees in 3:2, 600 against Subhash and 400 against Asha. So we've prepared the revaluation account. Next we'll go ahead to prepare the partners' capital accounts. Partners capital accounts. Left side debit side, right side credit side. We have particulars Subhash, Asha and Tanya. Again we have particulars Subhash, Asha and Tanya. We'll begin by bringing down the balance of capital accounts of Subhash and Asha by balance brought down 15,000 for Subhash and 10,000 against Asha. We'll enter the capital which is brought in by the incoming partner Tanya by bank account. The capital brought in by her is given in the seventh point. Rupees 15,000 is brought in by Tanya. Next, we'll transfer the loss on revaluation account to revaluation account. We had a loss of 600 for Subhash and 400 for Asha. Next, we'll deal with the reserves and fictitious assets. We have a general reserve appearing at 30,000. Nothing is specified, so we'll follow method 1 and we'll distribute the general reserve between Subhash and Asha and their old profit sharing ratio, which is 3:2. So we have by general reserve account 30,000 in 3:2. We have 18,000 for Subhash and 12,000 for Asha. We'll have to deal with the advertisement suspense. It's a fictitious asset. and needs to be written off amongst Subhash and Asha in 3:2. So 2 advertisement, suspense account, 3,000 for Subhash and 2,000 for Asha. And finally, we will deal with the premium for goodwill, which is brought in by Tanya, rupees 10,000. The premium for goodwill has to be distributed among the sacrificing partners in their sacrificing ratio. There is no mention about the sacrifice or sacrificing ratio, etc. So the old profit sharing ratio will be equal to the sacrificing ratio. So the SR will be equal to the OR, which is 3:2. So we have by premium for goodwill account, rupees 10,000 divided in 3:2. We have 6,000 for Subhash and 4,000 against Asha. There was no reserve left to distribute because the claim itself was greater than the amount of the reserve. So we'll balance the account for Subhash. The credit side is greater, 39,000. 2 balance carried down. We have the total 39,000 minus 3,600, which comes up to 35,400 rupees. For Asha, it's 26,000 greater total minus the debit side 2,400, which comes up to 23,600. And for Tanya, 15,000 greater total. The balance carried down, 15,000 rupees. So we've prepared the partners' capital accounts. Next, let's go to prepare the balance sheet. Balance sheet as at 1st April 2019. Liabilities, rupees. Assets, rupees. We'll begin with the liability side. Creditors. There is no change in the creditors figure, rupees 10,000. We have a liability, employees provident fund, there is no change, 8,000 rupees. The general reserve has been distributed. It will not come in the reconstituted balance sheet. The workman's compensation reserve has been converted into a claim. So it's workman compensation claim. And the amount of claim is rupees 20,000. We'll insert the capital accounts of the partners. We have Subhash, we have Asha, and we have Tanya. We'll refer to the capital accounts So this was the capital accounts. 35,400 for Subhash, 23,600 for Asha, and 15,000 for Tanya. $35,400, $23,600, and 15,000. So the total of the capitals is 74,000. Let's go on to the asset side. Debtors. The original value is rupees 22,000. We had to add this amount of 10,000 because the bill of exchange was dishonored. So it's now 22,000 plus another 10,000, which is 32,000. We'll deduct the provision PBDD. Original provision for doubtful debts is 1,000. We increase the provision for doubtful debts by 1,500. So it's now 2,500 rupees. Final answer for debtors 29,500. Stock. Original amount 11,000. We increase the value of stock by 2,500. So now it's 13,500. Bank account. Original given in the balance sheet is 21,000 rupees. Tanya brought in capital of rupees 15,000. She got in premium for goodwill of rupees 10,000 by check. However, in the point 4, the bill of exchange which was dishonored, we need to deduct rupees 10,000 from the bank account. So now we have 36,000 as the final bank account figure. Land and building. $18,000 is the original figure. We increased land and building by 3,000 rupees. So now it's 21,000 rupees. Plant and machinery. There is no change in the value of plant and machinery, rupees 12,000. So let's check if the balance sheet tallies. Liability side total comes to 1,12,000. Asset side total also comes to 1,12,000. So this is the balance sheet which is prepared by us. I'll remove the split and we can view all the three accounts together. This was the first account which was prepared by us, the revaluation account. It resulted in a loss of 1,000 which was distributed among the old partners in the OPSR, which was 3:2. Then we went on to prepare the partners' capital accounts. This was the partners' capital accounts which was prepared by us. We were left with the balance of capitals. In the case of Subhash, 35,400 rupees. In the case of Asha, 23,600 rupees. And in the case of Tanya, 15,000 rupees. So this we took to the balance sheet, the capital accounts. We inserted the revised values of all the other assets and liabilities. And the balance sheet tallies with 1,12,000 rupees on both sides.